Happy Sunday, everyone. Brian McKim from House America Financial. First and foremost, I hope you and your family are doing okay. These past few days, it's been a very unusual time, so all the best to you and your family. Wanted to give you a quick update on what's going on. You probably know by now, the Fed announced this afternoon that they're cutting rates. And so wanted to give you an update as to what that means for you, for mortgages, for rates. And so here we go. What did the Fed do? The Fed cut the federal funds rates to 0%. That was announced this afternoon, and it's getting, rightfully so, a lot of attention. But does that mean that all rates are now at 0%? I wish. No, that's not what it means. And really, lenders and mortgage bankers are not going to know until Monday morning exactly what this is going to mean for rates. When the Fed takes action like they did, it affects short-term rates. So credit card rates, auto loan rates, home equity line rates. Mortgage rates are correlated, but not directly always correlated to what the Fed does. So yes, the Fed cut rates. We don't exactly know what that's going to mean for mortgages. Now, another thing that was announced is that Fannie Mae and Freddie Mac have been given $200 billion, okay, to buy mortgage-backed securities. That probably is going to have a bigger impact on rates than just what the Fed did this afternoon. So my prediction is, yes, rates are probably going to drop on Monday, maybe Tuesday, maybe Wednesday. How much? We don't exactly know. We have to wait and see. What I do know is that mortgage rates are not going to be 1% or 0.5% or 0%. Let me give you some context as to what's happened the last week. So about 10 days ago, we saw the lowest rates in mortgage history. I've been in the business 18 years, and certainly the lowest rates I've ever seen. 10 days ago, we were seeing rates on a 30-year fixed at, ranging from 2.99% to maybe 3.5% on average. What's happened last week is that, generally speaking, rates have increased by 1%. So if 10 days ago you were at 3.25%, now as of Friday, you were like at 4.25%. And so we saw a big jump last week in rates. I think rates are going to come down tomorrow. How much? We don't exactly know. Bear in mind that if you locked your rate about a week ago, sorry, that's my son. About a week ago, you might still have a very good rate. I mean, if you locked in at 3.25 and now rates as of Friday were 4.25, rates are probably going to come down, but you might still have a very good rate at 3.25 or 2.99 or 3.5 even, wherever you locked in. So a lot of unknowns at this point. We don't exactly know, but I wanted to put this message out there that mortgage lenders are bracing for a busy Monday. Rates are probably going to come down. How much? We don't exactly know. Now, I know you probably have a couple of questions. So what does this mean if you have locked in and rates fall dramatically? Do you get the better rate? The answer is yes. Your mortgage lender can probably renegotiate you down if rates fall dramatically. Again, we went from 3.25 to 4.25 roughly. If rates go to 2.5, then there's probably a very good opportunity to renegotiate your rate lower. So you do have that ability to drop the rate even if you're locked. And if you just open up escrow and you're buying a home, same thing applies. If your rate is locked and the rates drop significantly, you can renegotiate lower. So thanks everyone. And this was kind of a long message, but I think it's an important message right now. There's a lot of confusion, including mortgage bankers and mortgage lenders. This is a very unusual time. It's unprecedented, you might say. And we don't exactly know what this is going to mean come Monday, come Tuesday, come next week. So thanks for your time. Again, I wish you and your families all the best. I know this is a very difficult time for many, very unusual time for all of us. So wishing you the best, and have a good rest of your Sunday. If you have any questions, you can give me a call, 421-4737. You can call me, you can text me. And once again, this is Brian McKim with House America Financial. Thanks.